Hi, I'm Mike Cintolo, editor of Cabot Market Letter and Cabot Top 10 Report, and I'm here with your Cabot Weekly Review. Well, after 2 months of correcting and consolidating, the market is showing some signs that it wants to turn the corner. As we take a look here at the chart of the NASDAQ Composite, we see three positive signs. The first is the two retests of the flash crash low. This was the flash crash low. Couple of retests. It's sort of a bottoming process. Bottoms are a process, not an event. And that's sort of what we've seen now for about 7 or 8 weeks. That's sign number one. Number two is this accumulation day we had on Tuesday. Big gain, higher volume a few days after a low. Tends to mark a turning point in the market. And number three is, so far it's only been a couple of days, but we have not given up any of these gains. Normally what you see is when a rally is going to fail, after you get something of a confirmation like we did here, the market will fall apart 2 or 3 days later if it's going to fail. We saw this actually as I clean up the chart. We had a little bit of a confirmation about 2 weeks ago here, and notice just 2 trading days later, the NASDAQ collapsed. I think that was the bad jobs report, but either way, the point is that sellers showed up very quickly after the market tried to confirm in advance. So the longer we can go here without any real distribution or real pain, the higher the odds that this rally can turn into, kind of the real McCoy. Now on the flip side, by our measures on the intermediate term trend, it is still down. And the reason is this red 25-day moving average is still trending down. This will take a few more days to start trending up if the market can hang in this area. Now, so hopefully sometime next week, if we avoid some real distribution, the market can hang around this level or even advance further, we'll get some confirmation that the trend is up. But for now, it's a little bit of a mixed bag. We still have leading stocks doing well. We have some positive signs with the market indexes, but the overall trend is still pointed down. So what do? We advise a real gradual approach. If you have a lot of cash on the sideline, you set out the correction, that's great. Now it's time to put a little bit of money to work. Do a little bit of buying, not a ton. Take a couple of small positions in some leading stocks, strong, resilient stocks, and then over a few days, if you start to make money and the market continues to act well, you put some more money to work. Following this method, it won't take longer than a few weeks, if that, to get very heavily invested in the very best stocks. So what are some of the stocks you want to look at? Those that are hitting new highs on good volume. So here's CTRP. We've mentioned this in prior videos. A long 6-month base here with resistance, first at 39 or 40, but then 41, 42. It broke out here. Volume was outstanding on the breakout. Now a lot of stocks have had big runs the last few days, so you have to expect some choppiness going forward. Doesn't mean it has to happen, but a pullback of 2 or 3 points or a few percent or a shakeout, certainly possible after running a few points in just a few days. Netflix, this is one of the institutional leaders that actually broke out above 115 more than a week ago. Volume has been good the whole time. It's only had one down day. And, nice shakeout yesterday. And just a leader coming out there, good volume clues, gives you confidence that if the stock is going to pull back like it did yesterday, there should be some support under there. There should be some big investors that want in. Salesforce.com, we've also mentioned this before. Huge wash and rinse day a few weeks ago on earnings. Another good volume day here, another good volume day here, another good volume day here. You get the picture. The buyers are active and the sellers really can't make a dent in the stock. On the gold front, which we're not huge gold bugs, but EGO, Eldorado Gold, huge breakout on big volume right before the market correction. It got hit a little bit, but it came back, tightened up. Now it's popping above resistance above 18 today on good volume. That's one to watch. VMware, again, we've mentioned this, broke out a few weeks ago, really has continued to trend higher with good volume clues. Any pullback of a couple of points looks interesting. And Dolby Labs, here's something, DLB. It's been consolidating in this wide range, 60 to 70, but if you look down here at the volume clues, just in the last few weeks, boom, 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 a lot of volume sticks, as we call them, telling you that buyers are active. It's held the 50-day moving average the entire time. Again, it's come straight up the last few days. Maybe it wants to pull back some, but any big breakout from here, or really any controlled pullback also, we think is buyable. So the bottom line is there's enough evidence to get you off a huge cash position if that's what you're holding. Do some buying, but it's not yet a time to totally jump on the bullish bandwagon. The market still has some things to prove. Some of these leaders have some things to prove. So just put a little bit of money to work and then let the market and leading stocks be your guide for the next few weeks. That's all the time I have for today. Thanks for listening, and join us again next week for another Cabot Weekly Review.